This is my January trading recap. Also known as Ghostalk Trades on Twitter, and I also run Unbiased Trading, an agency where we can automate or backtest your particular strategies. Now, if this is your first video watching my sort of recaps, these are a bit more off the cuff. This is simply me going over my personal returns over the month and how I performed on different markets and my sort of overall thoughts. Now, I do try and provide a bit of value throughout it, but just keep that in mind as this is primarily for me, and also you don't need to trade in the exact same way as me or anything like that. Now, first is small cap trading. So if you haven't heard of small cap trading before, this is primarily shorting gappers that are below around $1 billion market cap, and we're shorting things that push up from the previous close. So, previous close to open, it could be up, 30, 40, 100%. And we're traditionally shorting those as there's normally an edge in it. Now, for this particular month, I was fully automated. Traditionally, I normally do a 20% discretion and 80% systematic approach. The reason for this is some variables in small caps are very difficult to quantify or quantify effectively. Those can include market cycles, news events, things like that, such as we had an AI trend recently, and if I was applying discretion on those, I would normally size down on those particular trades because I know that they are in favor at the moment compared to other companies that aren't mentioning AI, but they have gapped up a certain percentage. Now, the reason I had to fully automate everything this month was previously last month, I barely took any small cap trades. I was personally just busy with other projects. And this month I had a personal commitment that I had to take care of. So I was just quite busy with that personally. And this kind of leads me into a topic I want to shortly discuss here. And it's around trading being a very key man risk business. If you are personally having no automation in your trading and you are the only one running it, if something happens to you or a family member or whatever, and you are taken away from the screens and you can't execute, it can be a huge risk to your business, especially if you have no sort of side income. That's why personally, I've never been a person that says you need to be like a full-time trader. If your strategy means you have to be, then I guess that's your main kind of like opportunity cost, right? Especially if it's a very profitable strategy. But for most people, I know many traders that are quite systematic and they've been able to continue their job or they have a side business as well. And I think that's incredibly valuable in trading. Trading has no guaranteed returns, no guaranteed profits. And also you have to show up every single day to actually do it, especially if you're discretionary, right? So this was a kind of key reminder this month. And I'm very blessed that I have automated systems. Now, for small caps, unluckily, it basically was break even. At the beginning of the month, it started off super strong, and then we just kind of bled out until Jan 14th, rebounded a bit, but overall, the gross amount was $632. I think after costs and everything, it was about like $300-ish, maybe a bit less as well. Now, as it was automated, you can definitely see that the amount of trades taken was a lot higher. It was around 57 trades. And this is simply because there was no weighing on those sort of fundamental factors. And it was just taking every single gap up trade that was within its criteria. Next, let's go over my futures algorithmic trading. Now, these are future strategies that are fully automated, meaning, automated entry and exits. And these are deployed on NinjaTrader 8. Now, as a disclaimer, these are percentage returns based on my core capital, so not the leveraged capital that obviously you get a ton of leverage in futures. And these strategies are not infinitely scalable. A lot of these are only trading max 2 contracts. And I know if they were scaled up to 10, 20 contracts, they would definitely have more market impact and slippage, meaning they probably wouldn't be very profitable at all. So please keep that in mind. These aren't strategies that I could deploy to millions and millions of capital. Now, for the equity curve for my algorithmic trading, I would say the beginning of this month was very tough for it as well. I went into around a 15% drawdown, which was pretty tough, I would say. While it was within, totally expected boundaries for my historical testing, it's never comfortable being down 15%. I know some people like to say, drawdowns and things like that don't affect them. Personally, to me, I would say drawdowns will always affect you a bit. Maybe there are some people that get completely unaffected by them, but this was totally within bounds of me having money that I could lose, and being down 15% was not a worry at all. I didn't think my strategies were broken at all, but it was still scary, and I want to admit that honestly, because if you're kind of doing your own trading, your own automated trading, and you're in a drawdown, it's going to be scary, even if it's within your historical testing. And now, historical testing, I would say, is the difference between you abandoning your strategy and not abandoning it. If I had no historical testing and I was down 15%, I would probably stop that strategy or stop the portfolio of strategies. But because I know from my historical testing it's completely within reason, then I just kind of continued on and just kind of tried to distract myself throughout the days, and we saw an incredible rebound. Later into the month, I think we finished up around 20% returns, which is just incredible. As you can see, the drawdown was pretty steep at 15.13%. Overall profit factor was very low, only 1.19, kind of across all of them. And then the next thing I want to go over is correlation. So I currently run around 11 strategies now. Only 9 strategies actually took trades in January, but it was a significant improvement compared to last month. These were a lot less correlated this month. Now, obviously, correlation can change over days and months. So I think it was primarily due to that. There was nothing really adjusted in the strategies itself. So I think it was just one of those months where there was low correlation between them, which is kind of great to see, to be honest. I was a bit worried last month where there were some areas that seemed quite correlated, but particularly for this month, we see green across the board for correlation. Now, to give you a bit of reference of how the NQ market looked in January, it's just within this box here. Obviously, we had a lot of volatility because of inauguration, and that kind of played into it. It was also, dare I say, like intraday movements are quite choppy, in my opinion. You obviously had some movements that were incredibly good for trend following, but if we look up here on my kind of portfolio, you can actually see there's quite a lot of strategies that were down this month. So obviously we had some incredible performances of like 14%, but we had 1, 2, 3, 4. We had 4 strategies that were losing money this month, which for me, I wouldn't say it's shocking, but it's definitely something that I haven't seen in the past couple of months. So it's just something to kind of keep in mind that because of these sort of environments that I had most of my strategies losing, or I guess 4 of my strategies losing, but still I basically made it up with 2 strategies and that was basically it. Next, I want to go over crypto. Now, last month for December, crypto was a huge surprise and sort of a blessing. I took some great trades there and made a decent amount of capital from it. This month was a slightly strange story. So first off, I would say the models I deployed didn't exactly crush it. As you can see with the equity curve here, they did okay, but realistically, they didn't do amazing in January. I wouldn't say this is actually something I'm super worried about because not many people performed that well in January, at least from talking to other traders. So I'm not super worried about this, but I do know like these models are pretty new. So I'm just gonna keep at it for longer, as I am newer to the kind of crypto space of deploying strategies. Probably sized a bit too aggressively for crypto. I was not aware of how frequent, I guess, or maybe January was a bit of a fluke month, especially because of the inauguration and everything, but there were many flash liquidations, and I was not prepared for those. While none of them all blew up the portfolio, there was a steeper drawdowns than I were expecting, so that's something to definitely keep in mind, and that's something I've already changed for the future by lowering my size in crypto as well. Next was kind of the Memecoin experiment. So I teamed up with a friend of mine, Pedma, if you guys know him on Twitter, and we kind of created a Twitter tracker to catch all the new contract addresses that were being released on Twitter, and we had a lot of like filter and data cleaning through it. And we actually were able to make some decent money from it. We were very early on Melina, which was Trump's wife's coin, which was an insane run. I'd say we definitely didn't execute it perfectly, but it was a very new market for us to be trading, so I don't have that many regrets with it. Kind of like I put some notes here as well about it, saying the biggest headache really for meme coins, in my opinion, is getting out. You either jump out way too early on the good trades, or you watch profits evaporate in nasty drawdowns because meme coins are very short-lived, especially nowadays. Like, even a solid meme coin probably lasts for maybe a couple of days max, and everything else lasts 2 hours, maybe an hour, maybe a decent one is like 4 hours lifetime, give or take. So while we did make, pretty insane returns, I'd say, for the amount of capital we deployed. It obviously was a very small percent of capital compared to our overall portfolios, but it was a really fun challenge and something to explore, like a new sort of edge. This is actually like a conversation I'd want to say is that some edges, especially in like, crypto space, and I would also say this is quite prevalent for like 2020 era of equities, was that there's these short-term edges. There's these edges that maybe last a month, maybe last a couple of months at best, and you can really maximize the returns of those during those months, but you have to be very early on them, and you have to be very dedicated to executing and evolving with those edges over time. So that kind of came to the conclusion for both Pedmer and me that while it was a lot of fun, we enjoyed it, we made some money with it, and we also learned a bit of things about using alternative data, for example, through Twitter data. Definitely our algorithmic trading is definitely the better way to go, at least for now. It's a lot less drama, way more consistent, and it was a lot less headache compared to dealing with all these incredible rugs on meme coins. Overall, I wouldn't say I regret it. It was a lot of fun testing it out. We obviously made a bit of money with it, but I would say the most valuable part of this was really just learning how to use some more alternative data and actually deploying it and actually seeing live results from it. It's something now that in the future I'm not going to be as wary or clueless around using alternative data, and will be able to catch on faster to these sort of events or trades I can do in the future. I would also say, like, while I'm very algorithmic and systematic, as you can see from my trading style, I would always say, maybe dedicate 5, maybe 10% of your portfolio, depending on your size of portfolio, obviously, to taking those sort of discretionary / exploration sort of trades. I think there's a lot of value you can get from exploring out new techniques, new sort of edges that you think maybe exist. And then those later can be either applied to, main strategies that you actually deploy in your systematic portfolio, or they'll just be techniques that you learn that can provide value in the future. Summing up, this month was generally a pretty solid month. However, I just suffered a decent amount of drawdowns this month. I would say when looking back on January, a lot of the time I remember myself being a bit stressed because I was in drawdown, and that was primarily it. Now, obviously, we rebounded later into the month, but that was, quite late into the month. I think this was like after January 15th or something, give or take. So it was quite in line, actually, ironically, with small cap trading as well. Wait, let me know how your trading went for January. I hope it went well.